Hey there, guys. It's Brian here, and today we're going to be looking at why I think the market is in trouble, right? It's not looking good right now, and there's a couple of reasons for that. So, firstly, it's because, as you know, over the past year or so, there's been a lot of trade tensions, and also the bull market has been running for a pretty long time, about 10 years. So, everyone is just speculating when is it gonna end, when is the bull market is going to end, when will the next market collapse be, right? So everyone is really on edge, and because of this, what people have been looking forward to recently would be the Fed meeting, where uh, they they will announce the Fed interest rate cuts. So typically what happens is when the market seems to be not doing well, when the economy is not doing well, uh, the Fed would most of the time cut interest rates, so to inspire the economy to grow, because when interest rates are cut, then that's good for the economy, right? More people will borrow, more people will invest, and everything is good. But then the last recent Fed meeting, they only cut the interest rate by 0.25%, which is not a whole lot, and so that's not good for the current stock market. That's firstly number one. And then another reason is that Trump isn't very happy about this as well, because he was hoping that the Fed would cut interest rate more. So what he did is he take matters into his own hand, and he issued additional tariffs on the on China, right? So you can see, right, like over here, why Trump's tariff tweet sparked market mayhem. So stocks drop, oil crash, bond yield falls, right? Because of all this combined together, then there's a global growth fears. So you can see he plans to impose a 10% tariff on an additional 300 billion of Chinese goods. So, right, you see, they have always been concerned about the growth and the trade tension, and now because of this tweet, right, is something that's becoming very very real. So you can see, right, Dow Jones down 1%, 1.05, S&P almost 1%, right, and yeah, you can see the Fed rate cut message. So there's a double whammy. First is the Fed rate, and then now also Trump adding oil on the fuel on the fire, and you can see here this as well. So it's saying that the Fed interest rate cut is not the real reason. The real reason is because of the mood, right? Which is what I mentioned, that everyone's been pretty on edge, thinking like when will the market crash, right? And then, well, we see the price break the higher highs, but it didn't last for very long at all, and now it's going back down already. So you can see here this S&P 500 chart. So after the Trump tweeted out the Chinese tariff and the Fed meeting, you can see the price drops very sharply, right? From the peak, that's about almost 3%. And usually important events, fundamental events like this, they usually signal the start of a new trend, right? So a new trend change. So usually the typical signs of it would be big news release, such as so we've got that already, right? The Fed and Trump. Second would be a large price change quickly. So you can see over here, we've got that as well. So usually when this kind of trend change, you see like over here, that's one of them, right? Over here another one, and around over here, right? So usually all these changes in trend, like from here is bull, and then change down, and then from here, right, change up, and then all these, they are usually triggered off by big events like the current ones. So I think if the price doesn't break this higher high, I think we are going to be going lower for some time at least, and I think it's pretty unlikely that we are going to continue going higher in at least in the near future, because everything is just not looking good, right? You can see most of the charts, they are all red. Everything's red. So I think this for SP 500, you can see it's the same for every other market. This Russells, so start to down a lot as well, right? First here and then here. Now we are on the third day, so it might not be the end of the initial drop yet. And here's Dow Jones also, you can see, right? And this is the China market, also down by a lot. Let's see what else we got. Hong Kong also down by a lot, right? And what's interesting is that Hong Kong already started dropping on the 25th of July, so maybe they already knew that like, something was gonna happen, and then today, right, that is this huge drop. So I think for Hong Kong, it's already pretty played out, but and then now this price is kind of a pretty like critical support level, because over here that's like 1, and around here this used to be the resistance, so it's now kind of became the support, right? Basically this range, and yeah, it's really down by a lot. So for Hong Kong, we might have to see, right? But considering the strength that it dropped down by, we may see it break through this support as well, because from here you see it kind of the same thing, like a huge sharp initial drop, and then from there a little bit of correction, but still continue to go down. And I think for the US market, it might be only the beginning, because it's only been the third day, and there's a lot more room for the price to drop. Although for the S&P 500, this is right here around this range. So around here, yeah, this will be support. Right, which already, when it started around here, it didn't really hold, so now it's already coming back here. So I think it's likely going to break past this, right? And if it drops through, the next support might be around here, this level or this level, right? So those might be good short targets. So just take note, right? What I wanted to, the main point of this video is to show you that there's going to be a shift in the market direction now, because there's a big events that took place, right? Big announcements, the Fed and Trump, and then the market is reacting accordingly as well. Prices dropped by a lot. So yep, that's for this video. Thanks for watching.